Welcome back to Krown's Kiddo Cave. Nice little Sunday morning over here from Chicago, Illinois. It is incredibly early as well. I actually woke up quite early myself and was feeling good, so why not talk about some goddamn magic into money while we're up in the dead hours of the morning, the god-awful hours, which I actually quite enjoy myself. Also, before we get into it, because it is a Sunday, we will be talking about long-term analysis, of which there's plenty of new things to talk about with that. Lower time frame, still mostly the same, but in the last 24 hours, because there hasn't been too much action, it does offer up the next major potential of what I should say for the next, $1,000 plus trade. I do believe it's probably staring us in the face sometime this week, and I would even take that a step further and say likely within the next couple of days. Of course, that is something that we're going to talk about in just a second here. So I'll leave it for that. And before I get into it, what I've always been forgetting to mention, first and foremost, to talk about the app. Of course, to answer the questions once again, because I keep on getting this question. It's all good, but I want to make sure that everyone has perfect information with this. The app is scheduled for November 1st. It'll be web-based at first. And with regards to the apps, the base program of it is just going to be like one major, massive, one-stop shop. Essentially, is the idea with all things related to trading Bitcoin. Essentially, as I wanted to not have to go through all the different bullshit apps on my phone or on my computer to get what I want to see on a day-to-day basis in just one screen. Then, of course, on top of that, for people who are already in the technical analysis program and the options program, you won't have to do anything, but you will be granted access into the app for viewing the program there. So I want to be very, very deliberately clear with this because I keep on getting questions with this, which I hope to really just set it straight here. I hope to really set it straight here right now. Yes, if you already, if you're already in any one of the programs, nothing's going to change for you at all once the app comes out, at all whatsoever. Only more will be given to you, and it'll be given to you in the form of access into the application. Anyways, okay, so and also on top of that, I'm also in the process of getting really serious about this psychological program that I've been working on. Been working on it for the past 6 to 8 months now. And I am almost ready to record. So I wanted to ask your opinion out there if you had any sort of preferences for how the recording would go, in the sense that typically when I've been doing psychological videos on YouTube, which are a lot more relaxed and a lot more undirected, if you want to call it that, and they're just really, short to begin with. Really only like 10 to 20 minutes long. But I've been playing what you're seeing in the background right here, actually, now that I come to think of it. So I'm just curious. I was thinking perhaps I'd just have it just straight up, just white background with me talking, just eye to eye, heart to heart. And perhaps that might be the best way. Perhaps people prefer the scenery in the background. I'm not so sure. I would imagine that most people are just going to listen to it anyway. So without even watching it, without watching the video, but listening to it. So I'm curious to hear thoughts on that because, I'm happy to make changes while I can. Anyways, with all of that said, I think it's time to get into it. So I would like to wish you the best, also the happiest of the happiest on this nice little Sunday morning, praying to good old goat Jesus for saviors in the morning. And with that said, see you in the live scene, baby. And just realizing now that I'm on daily on BitMexico, I think it's actually best to start out with GBTC once again. I suppose because it is Sunday, we will start out with the weekly look, and this is essentially what I'm looking at for Bitcoin. If you do make a relationship between GBTC and spot price action, we have actually seen GBTC lead multiple times in this past year to a year and a half of action. In fact, going all the way back on over here to February of last year, GBTC was the first mover in just about all these major moves to the downside, not necessarily on the moves to the upside for the past 4 or 5 months. But once again, we have seen GBTC lead to the downside, and GBTC did take that next leg to the downside, which would put us around our middle of May lows right here, where it closed on Friday for the actual weekly total close, of which we haven't seen for spot price just yet. We will be getting that later tonight at 8 p.m. Eastern Time. My point is, though, is that that would put us akin to what would be in the low 7,000s if we were to make a relationship between those middle of May lows right here, which was, if I go back down to a daily, you can see that it's actually quite literally right around this region right here. Yeah, down on this wick, right around about $7,000, give or take $100 right there. which is essentially where I'm looking towards if Bitcoin does break below the 3.7 exponential moving average right here. So make no mistake about it, it's still mostly the same thing as far as what I'm looking for to take a trade. I did uncover a little bit of my short position for full disclosure. I'll be happy to show you right here as I'm running about a Bitcoin profit, but I really only uncovered a fair bit of it, not like the full thing. So I'm still waiting for the actual break of this to fully uncover any sort of short exposure. For the upside, of course, the same logic kind of applies back above the 200 exponential moving average right here at above 8,600, 8,650. I would be happy to let go of my immediate bearishness, but as long as Bitcoin's below 8,600, and I want to say this very, forthrightly, as long as Bitcoin's below there, I am overall bearish, and I'm not looking for longs, I'm looking for shorts. If you're looking for this to bounce right here, maybe it bounces, maybe it doesn't. I was actually looking for a bounce yesterday. We didn't really get one. I mean, we got, I said 81 to 8,200. We did hit 8,100, but I was actually looking for this to get extended, and it still wouldn't really bother me if this did get extended with like a quick move up intraday to maybe like 8,200 or 80 or even 8,300 really. And that's really where I like to uncover the rest of my position, just because it offers up a better risk reward profile, and managing risk right above like 83.50 would just be quite obvious right there. So I do still think that that's actually possible here. We do still see some bullish divergence going on in the 4-hour digital time frame right here, 1, 2, 3 stabs, and price action is going to fall through. I mean, we did get the easy move back up to the 21 already, so to be fair, like I could argue that it's already played out. But within this region right here, if you are trading on lower time frames, what you're probably watching and what you probably want to be most aware of would just be let me get a fresh chart for this one. Maybe perhaps GDAX right here. But you could do something like this, and again, this is very low time frame bullshit, not something that I'm too interested in doing, but it does, it certainly can work if you are going to trade, if you are looking for the next breakout or the next like initial etchings of that breakout being put into the charts. And we are put into descending triangle right here, right? And we actually just got rejected from the top side once again. We are going to be printing, or perhaps we're going to be printing some hidden bearish divergence. No, we're not, or at least not right now. And I would say that you could actually probably play this triangle, and the break of this is, it's actually quite tradable here, especially if it's to the downside, just because if we do break to the downside, it's very likely to lead to that next flushing down to the $7,000 region that we were just speaking about, where GBTC already is. If we do break to the upside, which I still think is very, very possible here. I know I did say I was looking for a bounce yesterday to get extended to 82 to 83. I could let go of that today, but I still think it's very much possible. And it wouldn't change anything is my point. Again, nothing really changed for me as far as my dispositions, as long as we're below about 86, 86.50-ish region. So yeah, if we did break this triangle to the upside, I would say a quick move to about 82, 82.50 would be extremely, extremely likely. And then, to be put into the lower high right there, probably, probably if I had to guess. And then we'll kind of go off that if and when it does happen. But for right now, Bitcoin holding in there, and just like I'm not really looking for the upside until we actually, break these regions right here, and I probably wouldn't even trade for it to the downside. While it is more tasty, if you want to call it that, still need to wait for confirmation below, at the very least, 7,900 on a 4-hour digital close. Although I would say that a 4-hour digital closing below about 78.50 would make me a lot more confident, and preferably I'd really want to see this all done on like a 12-hour or a daily digital time schedule closing below those major levels, and then yes, I would be looking for the next major leg down. Of course, if we go over here and just focus on spot prices, the measure move from the descending triangle that we put over, for like 3 to 4 months from June to September, essentially, that measure move is still very much valid, and it's pointed all the way down here towards 68, 6,900 region. Also the 236 Fibonacci retracement. And if you do put on a volume profile in this region, you will notice that the volume profile is showing some activity in the upper 6,000s as well. So really overlaying that whole region quite well. Also, we do see the Cyan 89 exponential moving average on the weekly kind of coming in around that region, which actually has done a pretty good job in past history of Bitcoin of just holding up like the very, very intense dumps to the downside, and just as like a general phase kind of governor, whenever we're, it typically does get respect if and when we do test it on like a macro scale. Not only that, but if we take it just one step further and throw on the good old Trollinger bounce on a monthly, or actually we could just focus on a naked monthly for a second here to begin with. We do see a lot of major moving averages converging right around that $7,000 region, the red 10 simple and the yellow 21 right here. They did get the bullish cross on the last tick, just like we got back on over here in April 2016, which did lead on to a pretty nasty retracement in Bitcoin, to be fair, 27%, but it got picked up and marched it all the way from about $350 to $20,000 price per Bitcoin a few years later. So this is a bullish cross, and I actually do put quite a bit of weight on it, but likely to get tested, which is a good thing, which is quite normal. But the problem is that we're dealing with very, very big numbers here. So when you do talk about testing something like that, it's not just like a paltry, $200 move. It's, multi-thousands of dollars worth of move, if it even does hold, which the problem with this is that we're actually seeing a lot of altcoins just absolutely shatter that region on the macro. And I'll just kind of throw up a few examples right here. We do have Mr. Butyrol. You can see just absolutely just shot right through the 21 and the 10 for that matter. This is Litecoin right here, same thing. In fact, we're actually about to have the bullish cross on it right there, to be fair. But I'm not sure if I trust it that much. Stellar never even got a chance. Monero, again, just basing on the 55. I mean, just complete, never even got above the 21 actually. Ripple, what's Ripple doing? Ripple's actually having a nice little rally here, I believe, off of the swell event. And most of the other shitcoins, highly advanced altcoins are looking much worse than any of the ones that I just showed. So unfortunately, not looking too good there. Anyways, back onto monthly on Bitcoin and just outlaying this, this next area that I'll be looking towards. Not only do we have those major movement outs coming in that region, all the other things that we spoke about before, but also we do have the Trollinger Bands, which did confirm a rejection right here, a lower high rejection, by the way. Which is extremely likely to come back down and test around the medium Trollinger Band, the silver 20-moving average right here, which is about $6,900 to $7,000, and actually has a little bit of a negative slope, surprisingly enough. Speaking of negative slopes, there's a few other things that I want to focus on here, and the biggest one for me is the weekly. The weekly having both the red 10 simple and the yellow 21 exponential moving average having negative slopes, and also providing a rejection on the last week's test to the 21 is quite damning from a historical standpoint. Anytime that we've gotten both a negative slope on the 21 and the 10 simple on a weekly time frame, we played out pullbacks. I mean, it's not a fucking pullback to go down like 70 to 80%, but we played out like 70 to 80% downs. Of course, example number one would be right here. They both turn negative I would say right here. And from there to our ultimate low is about 72.5% down. Before that, the time that we got them both angled on the downside was right here together, calling this bull trap rather well, and got another 75.5% drop back right there. It's just such a smug implication. It's like it's a drop back. It's just a drop back, bro. Just a drop back. Nothing to worry about here. For what it's worth, and I was actually speaking to my mentor the other day about this, and I still speak with him quite often. One of the things that's one of the things that he always used to instill in me, which I think kind of helps maybe people understand my point of view on on why holding those is so bad, is just a sense that whenever I'm holding a paper loss, I treat that as a real loss. That is a real loss in my opinion. Because, well, I mean, though, like that is the present value at the end of the day. Anyways, this example right here, another 60 or about a 58.5% pullback right there. Just a pullback, bro. Just a fucking pullback. This one right here, not as good of an example, but another 50% just pullback, bro. I mean, really from top to bottom, it's more like 76 and 3/4. And before that, we don't really have any examples of when they're both having a negative slope. So again, something that really, really bothers me is just how all the higher time frames are really suggesting heavy pressure down. Not only that, but of course, we do have the death cross coming on the daily relatively soon. And this, in the way that it's shaping up right here, is not good. I'm using like very high quality terms right now. I apologize. It is a little bit early for myself, but as you can see, the white 200 simple and the lighter green 50 simple moving average right here converge on each other. They will converge somewhere late next week on the 23rd or 24th of October. And then the exponentials, which I think is going to be a much more powerful cross, will happen somewhere probably around here, like a little bit, or perhaps like early next week. And just both those things happening does add power onto the other. It's kind of like verifies the other one in a sense. Sometimes you see one happen like very, very much in advance of the other one, and usually it's the simples, and usually they're going to be wrong in that first pass. But in this case, when they're both kind of going together, I would say that it certainly does increase the probability that once we see just one of them cross, we're going to see price action follow through. And this is also just another reason why I am overall bearish, especially as long as below the 200 exponential moving average right here, because we will get the death cross as long as price action is below. I mean, that's just the way that moving averages work, right? So I would say that come like another week of just hanging below 8,700, very likely to just at that point break down. I would, however, say that if Bitcoin could hold here for like sideways for like a month, that would actually start to morph into not reaccumulation, but accumulation just in general. But it would imply that we have to really go sideways here for quite a bit more time, at least another month, maybe 2 months. And then Bull Jesus's prayers would be answered, and then we could just float onwards and upwards. I think that's a little bit more hopium induced than anything. I don't think that that's what we're doing. I think that Bitcoin does go lower, and I think that Bitcoin can go significantly lower actually here. But as I've been saying before, while a lot of people are now starting to talk about some downwards targets, that is the biggest factor in making me think that maybe we do play out a pretty nasty short squeeze beforehand. Maybe we do have another run up into the mid to low 9,000s, especially if 8,600 gets taken out. I will be targeting a move towards like 93, 9,400, which is certainly tradable. Again, I still think that it's kind of unlikely to happen, but it's within the cards as long as we're kind of holding within this consolidation right here. You just never know. But all major moving averages kind of switch into the posturing like this is not good. Anyways, look at the simples on the daily as well. As the simples I do like for overall trend, and they can give us an insight into when the pressure builds up once again. We do see a negative slope once again on all these guys. In fact, the 30-some moving average is getting extremely aggressive here, and the 200 simple is almost flat as well. I mean, this is quite nasty. So this area is going to become extremely strong resistance coming on the way up, assuming that Bitcoin does break down from this from this area. Again, about 8,600, 8,700 in this pocket right here, looking very nasty. Anyways, I think that's we don't really have too much else to say about it other than that. The 30 simple is just so aggressive to the downside. I mean, that is intense. But like I said, until we actually break this next level right here, there's not really trading for me to be had. Let's go check out some fundamental indicators. First and foremost, we'll check out the Bitcoin VWAP. Well, this isn't necessarily fundamental, but it's a Bitcoin VWAP ratio, basically showing the volume weighted average price. It's essentially showing you, what the market paid for their coins. Is kind of what it's showing you in these different line charts down here. And what these different line charts represent is just different moving averages on the VWAP. It's nothing more than that. The blue one, the dark blue one, is obviously the more reactive one. The purple is kind of like a medium, and then the pink is a very slow moving one. Anyways, as you can see, there's a very specific we can say so much about this, and we will say so much about this actually today, because why not? There's a lot to be said. And first and foremost, where can we just start? I mean, where do we just start? Well, first and foremost, I suppose the most important thing with these guys is their relationship, like all of them, their relationship to where my cursor currently is right now. If you ran a regression line through where my cursor currently is, then what you could say is when they're all generally above, we're mostly bullish. When they're all below, we're generally bearish. It's pressure down. And then we can take that one step further. The strength of that trend to the upside or the downside is relevant to the divergences between all three of those different moving averages on the VWAP. And when you see an example like this, right, I think this is better said with an example. The blue being the most responsive, getting the most divergence away from the other two on the top side. This would imply a very bullish market right here, of which we certainly saw from 2016 to 2018. I mean, just phenomenal. As these guys continue to get more and more, again, divergence away from each other. That is the important part, and then also their relationship to each other in general. So the blue above the purple above the pink, that is ultra bull. And then vice versa for ultra bear, which we see right here, the blue below the purple, below the pink, essentially. And then the strength of that is relevant to the divergence between those guys in that overlay. So the reason why I'm bringing this up right now is because we actually have seen a change of behavior here. We did get all three of them above this, above this regression line right here during the run to about 14,000, which was good. But what we're doing right now is we're actually giving it back, and we have seen the purple go below and maintain below the pink in most recent times. And just going back and back testing just that much, like nothing else, not even taking it to the other steps that we literally were just looking at, but just looking at that, every time that we've had that signature, we have had a nasty downwards market. The last time we saw right here, purple cross below the pink, that actually happened on the 6,000 low, but did set up the next, 12 like year of sideways to down action. The time before that was back on over here, cracking below, again calling this bull trap and this massive down. I think this was like 50 to 60% down move right there. Then the time before that was this guy right here calling this 50% down move, and then the time before that was this guy right over here calling another like 75% down move. So all of those times have operated flawlessly within that trajectory, which is concerning because it would suggest that we, likely head down a lot further. Remember, Bitcoin's had about a 44% retracement thus far, and about a 44% retracement thus far. Compare that to, what the historical ones were kind of looking like, which were around the tune of, at the very least like 50%, which would put us somewhere down around mid 6,000s essentially, or all the way up to like 60%, which would put us back down around 5,500, or, in some cases like 75%, which would put us back down basically at our $3,500 low right here from this year. So it would suggest, those percentage plays don't sound like they're too much different. Like 40% to 50% doesn't sound that much different, but we're talking about big numbers here. So again, it actually does make a huge difference as far as a trader goes. Not only that, but something that I haven't been covering of weeks past, but I have before that I want to follow up on now is the Bitcoin network momentum. This is really fucking bad, or at least I think it's bad, but I think you can also come up with explanations on why this should be operating like this as well, so it's not as bad maybe. But this network momentum right here is coming all the way back down below its prior, below this prior low, the low that we put in before the drop from 6,000 to 3,000. By the way, now the thing with this is that it does make sense to expect the network momentum to subside when we get bigger custodians like backed coming into the market, which just came out, and then all these ETFs that are getting talked about, of which none have really been approved just yet, but I do think that it is probably sometime next year. But those are going to be bigger custodians. You hear about all these bigger names getting this into the play, wanting to be custodians for that, and that would naturally take away from the network, from the on-chain network momentum, I would imagine. So that would make sense if we're coming back down to this region. But just from a longer term time frame perspective, just looking at historically, I would say at the outset it would be a little bit of a cause for concern. We haven't really done that before on like a macro scale, setting in a lower low over time, which I believe we might have already done. This is 209.674. This is 200. Okay, so we aren't there just yet, but we're getting damn close to getting to this past this prior low. I would say just by even coming back down to this prior low is not good. It's like when you see these impulse moves on Bitcoin that get faded within the next day. It's never good. It's almost never good. Anyways, okay, so we spoke about all of that. I suppose we could go into the 12 hour just for a second here as well. Actually, let's go through the lower time frames. As I didn't really flesh them out too well. I just talked about the descending triangle right here. We also have bullish divergence, to be fair, so it's not it's not all set in stone. 4 hour Stokes are angled down, rejecting it now at the neutral zone, to be fair. But I don't really see anything conclusive here. You see 4 hour and 3 hour agreeing with each other. This is your 3 hour Stokes. 2 hour Stokes are probably pointed up. Yes, they are, and hourly Stokes are probably up. Yeah, they are. So I want to see them all get on the same side. And for right now, it looks to me like we probably teeter out a little bit around here. If this smaller descending triangle on the lower time frames does get broken to the upside, I would be looking for a quick move to like 80, 200-ish region and maybe a little bit beyond that, short term, very short term, and then kind of reassess. But for right now, just kind of holding within this pattern doesn't really do anything for us really. I'll go back to the 12 hour now and kind of flesh out this 12 hour Stokes still very much up, which like I've been saying, I really dislike trading against them just because they've been phenomenal at getting, moves as of recent times, not just recent times, but the last year really. And the thing with that is that we actually are printing a little bit. Are we printing some bullish divergence on 12 hour RSI? Not really. But the thing with this is that with the 12 hour, that is also my counterpoint for just getting blindly short right now. I don't think that it's. I haven't seen too much success trading against a 12 hour as of recent times. So I would say that kind of angled in the way that it is does diminish the probability that it happens, right now, at least in its current setup, I'd say. But overall, the 12 hour chart is still heavily bearish here. The green 55 exponential moving average has crossed the downside of the blue 3.7 exponential moving average right here, which I do believe is running this rejection. So it tells us that the bots and algos are respecting this as a major cross right here, and they are on the sell side. And if they're on the sell side, head. What does that imply? Well, that implies that historically speaking, we're going to get something similar to what we've seen, on the last few times, of which I'll take off everything for now, and we can just focus on these guys right here. Whoops, we need that one. Just get rid of all of them. No, we do need some. There we go. These are the two moving averages in question. And you see something very, very similar here, in fact. Look at this right here on our lows from November, December, January, February. Bitcoin puts in a descending triangle, right? It breaks out, gets that first major consolidation right here as they get the bullish cross, and then the next, few legs are set. It's beautiful. It's very, very nice as they get divergence away from each other on the moving averages. Well, what have we done right here? We put in a descending triangle right here. It's basically just the opposite upside down version of a descending triangle right here. We got our first major breakout during the consolidation. What happens? We get the cross right here. That's your support. This is your resistance. Does that lead on to continuation of a trend? I'd say likely. The time before that we got a death cross on this was, did we have a one-off right here? We did have a little bit of a one-off right here, to be fair. But more importantly, if you if you drew like a regression through it, you would notice that realistically it was telling you to just hold that short. Never really gave you divergence between those two moving averages for a sustained amount of time, of which we are seeing right here, of which we did not see right here, and we did see right here as well. Anyways, before that, the last bullish cross that we had was coming in all the way back from the major turnaround from October 2015. And I'd imagine that if we go back a little bit further than that, perhaps into the prior bear market cycle, you do see this cross right here precipitating this massive drop down of another 74.5% right there. Not bad. And this one right here actually not doing it too well. So this is an example of not a good one. And we actually do get divergence on this one. Now, to be fair, from cross to low, it's actually not as much. It'd be something like just blindly trading it would have still gotten you like 30%, to be fair. Even on an example like this right here, which I think that this is actually a perfect example because we do have a perfect test on this. If we were to get 30% drop down from the cross itself, that would still put us at $6,000. So I do think it's quite likely that we do head down further south for Bitcoin. I think it's very likely. I think it's going to be very frustrating for people. I think it's going to be very long and drawn out, and it's probably going to really suck. What people hate the most is not just like going straight down or going straight up, but it's going sideways. And sideways and down is excruciating, painful for maximum pain for hodlers for the most part. As not like the true hodlers. The true hodlers are going to hodl no matter what, because they've been hodling ever since fucking 2011, and they that's just what they do. But they're a true hodler. If you're not that person, if you're not quite literally going to hodl through anything, then you are not a true hodler. You are at risk of capitulating, and that's what this next phase is probably going to be designed to do. Again, this is all assuming that we do not get back above about 8,600. Which I think is looking less and less likely. I do want to touch on some that I read on Twitter earlier. Someone passes my way that Peter Schiff said that there's a head and shoulders on the weekly Bitcoin chart, and the target of this is $2,000. Listen, I am bearish here, but we have to call a fucking spade a spade. First and foremost, this is not a head and shoulders by any stretch of the imagination. Volume signature would be wrong. Even the shape is wrong. I mean, the right shoulder is kind of lackluster. Sometimes you do get a weak one like this, but you want to see more symmetry between this. Not only that, head is a little bit too round to be considered a real head. And again, the volume signature on, even on the head alone would not make sense. What this could morph into, which would also be bearish, which would also be quite brutal, would be an inverted cup and handle. But even an inverted cup and handle here, assuming that we get another run back up to test around like 8,900 or $9,000 and get rejected there, and then head down, the measure move on that still wouldn't even be down towards $2,000. It'd be about $4,500, which would kind of make sense. I mean, that is where the 200 exponential moving average is coming, the 200 simple moving average is coming in around right now, all the way down here, and it would still put us in at higher lows, to be fair. Possible, definitely possible, but like I said, for myself, to the downside, I take it one step at a time. As a trader, as an analyst, you could say all sorts of dumb shit, amazing shit, but at the end of the day, if we get this next leg down here, I'm looking at the $7,000 region, like 68 to 71, and if Bitcoin bounces there, perhaps it turns into a reversal. I'm happy to look at that with fresh eyes if and when it happens. Again, if Bitcoin gets above 8,600 here, I'd be happy to change right now. I'd much rather be bullish than bearish. It's just a lot easier. If 6,800 does fail, I don't believe that Bitcoin's going to stop in the low 6,000s. I do believe it will hit down towards 50, mid to low 5,000s, maybe even upper 4,000s. At that point, we'll just have to kind of come back and see it, and see what it looks like at that point in time. It would be too far in advance for us to really, for me to really like look at it right now. Too much crystal balling is not good for the soul. Anyways, I suppose while we are here on the weekly, I should also show that weekly RSI has broken below the levels where I think, a lot of people are looking for this to just reverse right here. And again, while I do want that to happen, I actually really do want that to happen, but I don't think that it happens. Again, just another kind of nail in the coffin for myself that suggests that we do head lower, or that we're just not doing anything like that. We're just going to reverse, just all willy-nilly into a bull market once again, is the weekly RSI. When we were doing that back in 2015 to 2018, on this one right here, stomach's starting to hurt, by the way, if you're wondering why I'm shifting around in my seat. Probably need to shit, actually. Anyways, looking at this right here, we did have plenty of pretty nasty pullbacks that were 30-40% along the way. And every time the weekly RSI would come down to where my cursor currently is right now at about 53, at a 53 read, and then bounce off there and continue up. What have we done thus far? In Bitcoin, we've shattered this region, and we're basing on the bearish control zone right now, which typically does actually bounce it. But, I'd imagine that we probably come back up, test that region. Then, if it fails, then good night, Bitcoin, for a little bit of time. Let's see. What about a 2-day? 2-day showing the same support region, same support region, and also the same preliminary resistance region right around 8,200. Not too much to talk about there. We do actually see 2-day Stokes once again crossing back to the downside. That is quite nasty indeed. 2-day Jewel is continuation. I don't look at that as a signal, but it is continuation. 3-day, 3 days got continuation as well, I believe. Assuming that we see it curl over again. Actually, we haven't seen it just yet. 3-day Stokes still down. 3-day RSI holding in there. Going to be creating some divergences here, but not quite yet. In fact, just looking at the 3-day right here, I would say, if you wanted to take that 8,600 level down, because I've been saying 8,600 is kind of like my preliminary area for changing my bias on Bitcoin from bearish to bullish. If looking at the 3-day, if we could even just get back above the Cyan 89 exponential moving average about 8,250, that would be okay. I'd be looking for another test of 86 if that would happen. Very likely that we get that above 8,250, 8,300 region. Yeah, so another $300 to $350 run. Not bad. But the problem here is, once again, we're actually going to be seeing a bearish cross of the yellow 21 exponential moving average and the green 55 exponential moving average right here, which has been phenomenal for Bitcoin. A phenomenal cross that has been respected, multiple times in the history of Bitcoin. So the last time that we had a bullish cross, very similar, right? During this consolidation right here, before leading up for the next few months to the upside. The last bearish cross before that was back on over here, March of 2018. It led the whole way down from basically this high at $10,000 down to $3,000 low, 68.5% drawdown. The last bullish cross before that took us all the way through the last bull market, from October 2015 to 2018. Let's just kind of leave it right there. But again, it's another thing, just showing the trend, really having a major change in behavior as far as I look at it. I don't like that, I think it's very, very likely that we do get a pretty nasty short squeeze at some point, but does it really make sense to do it right now? I don't think so. I don't really think so. Just looking at my screen, making sure that my microphone's working. We're recording as well, so that's also good. I'm already 30 minutes deep into this video, so it's good to check now before it gets to an hour long, I suppose. Good fucking timing, Krown, once again. Anyways, let's go check out CMEs. I'm curious how I want to remind myself how I closed 79.60. I don't really have too much to say about this. It looks to me like spot's going to open up right in line with CMEs, which is typically continuation, but I'd really want to see like a major gap up or gap down. I'd feel very confident in a strong move to the downside, like below 7,000. If we opened up CMEs later tonight at 5 p.m. Eastern time, anywhere below like 77.50 would be good enough for me, or even below like Friday's low at 7,800 would probably be good enough for me. Other than that, don't really have anything like too unique to say about this that hasn't already been said in past videos or just by looking at spot in general. And then same thing kind of for GBTC. Remember, GBTC does look overall nastier. Of course, I think that is kind of like leading, or at least it has been leading for a while. It did take this leg down first. It did take this. It did take all the moves down in 2018 first as well. And to me, it looks like it wants some more down here too. But I think it's time to get on to Bitcoin dominance, and then we'll look at total market cap, of which I think that it kind of just rounds out the discussion a little bit more. Bitcoin dominance right here. I think we're still holding in with this falling pizza that we were looking at yesterday. Let's put it on a lower time frame here. Yeah, we're still holding in it. We just tested the resistance of it. So typically after you test support, then you go test resistance. Well, what's gonna happen now? We either break the resistance or we come back down and we base upon support at 68 spot 33. Neither of those really does anything for me. I need to see a break below that region. That would do a lot for me. That would make me actually quite bullish on alts for Satoshi. So do keep an eye out for that. They're gonna have a pretty massive rally if we do break that region, probably all the way down to like 67 and a quarter. By the same token, falling pieces are more bullish than not, and statistically speaking, it's more likely to do that. So what I would say here is that it's if we did break back above 68, or let's call it like 69, just be conservative. I would say that I'd be looking for this to explode upwards, and alts are going to get absolutely fucking cream pied, of which I think that that's probably more likely, because if Bitcoin breaks to the downside below 7,800 or even to the upside above 8,600, you're probably going to see both those things happen. The only way, in my opinion, that alts really get some time to rally around is if Bitcoin just holds within this current region, between 79 and like 82, and just doesn't really deviate too far away from that. But a volatile Bitcoin is not good for those for altcoins, in my opinion, and a move back up to like 60 or even 70% would just be devastating, especially when alts really haven't recovered anything from that last drop. Looking at Cardano right here, as far as the macro goes, nothing's changed. We're trading sideways for the last few months, ever since August, just trading sideways. You've had your rallies, you've had your rallies, but mostly failed, or they're all failed. We're just trading sideways right here. Nothing's changed. The macro is unchanged. This is why I always say, when you see a straight down chart like this, don't expect it to change. Expect more of the same until something changes, and then expect more of that. Actually, that's actually the way to do it, really. It sounds really counterintuitive and really simple and easy, and it is, and it works. And it works. That's the big thing with it. Don't mistake simplicity for invalidacy. Is that a word? I don't know. But again, Cardano here, so far away from the 21, even on a weekly, it's not like I'm looking to blindly short this thing right here. I'd much rather see like a pump back up to the 21. If the dominance chart does break down, I'd look for that one to pop back up there, maybe like 520 Satoshis. Let's look at, total market cap as well. I do want to check out this one. And then I completely forgot to talk about volatility on Bitcoin as well, but we'll get to that. Total market cap is looking pretty nasty, looking pretty bad. Bitcoin below all major moving averages, or not Bitcoin, but the total market cap has officially initiated a death cross. It is below all major moving averages, and for all intents and purposes, man, this looks like it wants more down to me. I would say, obviously the next support is kind of where our last basis came in around 195 billion. But I do think that likely breaks, and we do hit the measure move off this ascending triangle, which would put us all the way down towards 175 billion, which would be akin to that 5,500 level on Bitcoin, which does show some pretty long-term support on that. So that does kind of make sense. But the big thing for me here is a death cross. Not good, man. Not good. Again, just going, historically testing this one on the total market cap actually is not helpful, because we don't have enough history, unfortunately. But I'd imagine that, coming into consolidation like this, doesn't look good. Anyways, let's go check out. I do want to talk about Bitcoin on why I do think that the move is coming this week. The reason why I say that is because volatility is getting crushed. It's getting absolutely crushed. 12-hour historical volatility percentile is lower than where we were on the last breakdown from 10,000 to where we are right now in 22nd, 23rd of September. We are actually even lower in volatility than we were than when we were in like March before this breakout to the upside. The only time that we've been lower than this in the past year was before the breakdown from 6,000 to 3,000 right here, and then the multitude of all these major dumps during 2018 as well. And the thing is that the lower time frame that we go, the more and more this gets accentuated in a sense. 4-hour historical volatility percentile extremely low, extremely low, and we can see that's even downtrending right here too. So that means that it's building up a massive case. If we see a move above this region, like a 20 marker, I'd imagine that's going to be the start of a very strong trending move. Let's go down to like a 2 hour just out of curiosity. Yeah, it's been kind of ground down for a while now too. Hourly, a little bit less so. So we have been having our hourly moves, but of course the hourly doesn't set like the daily trend, unfortunately. Going back to the 12-hour, extremely low, and looking at me like, here's the thing. You can cut this up both ways. Having very low volatility when you approach your lows could be seen as bullish. It could be seen as accumulation. I mean, to be fair, that there's a lot of people who would argue that, and I would actually agree with that in a lot of stances, in a lot of cases. I don't think it's likely here. But it does, remember, volatility is direction neutral. So if we do, if you do see this explode here, it doesn't necessarily say that it doesn't, it actually kind of would, in a sense, suggest that we actually, the path of least resistance would perhaps be testing a little bit upside since we just tested supports. Then again, the counter argument to that, and what I would say and what I believe, is that we've tested this area so many times, having low volatility on this region. If this was going to be a bounce, you were expecting it to come out right here. And when we did get the expansion on volatility during this segment, Bitcoin was held, and all we did was put in a lower high. That's all. That's it. We did nothing. And then that gets faded once again. We reapproach the lows. To me, that's more of a bearish signal than not. But you can make the argument both ways. Again, it's more neutral than anything. But being below all major moving averages, I would say I put more weight on that as far as direction goes. And then volatility just suggests that we're going to be looking at a pretty massive move. Anyways, let's go check out some of the other top shitcoins before we wrap this bitch up, and then I'll send it off once again. Mr. Butyrol, what are you doing, my friend? What are you doing? Hanging on to the lows once again, just looking very, 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 very lackluster, below all major moving averages, and very comfortable below there as well. Weekly is below all major moving averages. I would say that I am bearish as long as Mr. Butyrol is closing below 183 on a weekly closing basis, and this would look like it's kind of setting up for continuation. Even though momentum oscillators are crossing back up, we do see weekly Stokes up, we do see, well, I was going to say weekly RSI looks okay. No, it does not. It doesn't look that great. What about Mrs. Litecoin? I am bearish on Mrs. Litecoin as long as she's closing weeklies below the 200 simple. I have a strong rule that I don't play anything bullish that's doing something like that. That also means if it got back above, I'd get quite bullish on it, but not looking good here either. On lows, I mean, we're still downtrending here. We did print some bullish divergence, to be fair, on a daily. And the daily jewel actually might even be setting up for a buy signal. Actually, it actually might. But I wouldn't be bullish on it as long as we're below $60. I don't think that there's any reason to be bullish on it. It's likely to go with the rest of the market. What about Stellar? Stellar just losing its rally already petering out a little bit. Daily Stokes having a fresh cross down, rejecting the bullish control zone. Daily RSI just bearish the whole way through. Only having a resetting format there. That's all. Monero actually looks a little bit more constructive than the other ones, to be fair. Daily Stokes up, daily RSI is constructive here, and does look like it wants to test a little bit higher, to be fair, back up towards maybe 57. Then again, if Bitcoin goes down, I don't think that Monero does not go with it. to put it lightly, to put it bluntly. Ripple losing its footing a little bit here. We did hit or almost hit my 31.5 cent target. We got up to 31 cents. That's close enough for me. I do think that it trades a little bit sideways here, and then probably we just confirmed another lower high. Not good. Again, I'd pay attention to the weekly though, because this one is event driven, so I feel less confident on it. If the weekly closes below the 200 simple, which is 29.5 cents, I would say that I'd be more geared towards the downside here. What else do we have? EOS. What's EOS doing? Looks the same as the other ones, maybe a little bit less inspiring, just kind of flagging out on the lows once again. Neo, same thing. If this one does pump up, I'd probably be looking for a test towards $7.5. Tron, same thing, man. Bcash, yeah, this one does look like it wants to test up towards maybe like 220, but overall, still just a downtrend. That's all. Zcash putting in a descending triangle on the lows right here, actually. Support right around $35. So if that does, or sorry, $35. So if that does break to the downside, I'd be looking for a move down to $30 even, maybe even lower than that. If it does break to the upside, which is possible, I'd be looking for a move back up to $41. Anyways, back on to Bitcoin. Let's wrap this bitch up because I think it's time. I think I've probably bored you enough already today. And realistically, not too much has changed. I do think that with Bitcoin's inability to really play out as, just even somewhat of a significant bounce thus far, on these lows does diminish the chances that we do test like 82 or 8300 here. Like I said, I am a little bit uncovered on my short exposure, but I would really be I'd really like to put on a much bigger position if I am going to get what I want. I just want to see how we resolve this next one. Do we get another test higher, or do we actually break down from here and follow GBTC as a new weekly opens or something like that? For myself, again, the levels are still very much the same. 4-hour total closing below 78.50 would probably do it for me to the downside. I would feel a lot more comfortable with like a 12-hour or daily closing below 78.50 or 70 or even 7900 probably does it for me. To target the next move down to the low 7,000s, upper 6,000s. I'm overall bearish as long as Bitcoin's below 8,600, 8,700 right here. as these guys will have some pretty nasty crosses relatively soon. And, if Bitcoin does bounce here, like I said, it is kind of printing a little bit of a ascending triangle on the low. So if you do see a closure on like a 2 hour above 8,000, I probably would be looking for another run back up to, at the very least 8,200 most likely, and then probably even 8,300 after that, and then reposition perhaps, or put on a position there. Again, for me, the levels are quite clear here. And realistically on these lower time frames, I don't have any real intent to trade them, so don't take it as like, as like the end all be all, or nothing that I say should be taken like that at all anyways. But just looking at this right here, if I had to chart the lower time frames, this is how I'd do it. Something like this. So yeah, if we do break above the descending triangle, I would be looking at a move back up here towards 82, and then if that area gets taken out, actually I'd be looking at a move towards 8450 region, maybe not 8300. I think that area is maybe irrelevant. Again, this is low time frame stuff, if there ever was low time frame stuff, so I don't put too much weight on it, and I don't really care all that much. I'm really looking for the next big trade on a daily, and whenever that 377 exponential moving average gives way, I'll be happy to angle myself a little bit more towards the downside. Anyways, that's going to do it for right now. I do want to wish you well. People always ask me about my stop losses on these trades. Understand that I don't really have any like real open exposure right now. I mean, I have a little bit, but it's not anywhere what I want. But anywhere back above the high of yesterday's dildo 8,100, we're probably going to rally up another 100, 200 bucks above that. So I'd say I'd probably de-risk above there. Maybe consider repositioning, around 80, 8250, 8450, something like that. We'll get to that if and when it does happen. For right now, I do feel like there's still pressure down. So with that said, I would like to wish you the best on this nice little Sunday morning. Go pray to Goat Jesus, because he is our one true Lord and Savior, and he has been keeping you safe in Safu and me safe in Safu for all of the eternity of cryptocurrency land. And it's time for me to go binge eat, man. I'm hungry as fuck. Anyways, take care. I'll see you tomorrow. Perhaps if you're going to be there for the live stream, hopefully get some movements by then, because I can imagine that probably people are not too thrilled with the lack of action in cryptocurrency land as of recent times. That's usually when you do get your moves. So anyways, take care, and see you soon.